She doesn't have the one.
Oh, she doesn't? Yeah, she does.
Oh, did y'all?
Okay, so welcome, and we'd like to call the meeting of the Rutherford County Risk Management Committee to order. And the first item on the agenda is to approve the minutes of the last meeting. Do we have a motion? Commissioner Allen, do we have a second? Oh, okay, Ms. Hickerson. Anyone with any corrections or additions? If not, all of you in favor of that, then please say aye. Aye. Any opposed? All right, thank you very much. Now, Ms. Street, give us a report on our financials.
We'll begin, if you look at the reports for Fund 264, we'll go to the, on the first page of the report, you can see the variance is starting to show positive. We're at $979,465. We are seeing a shift in the paradigm with our expenses being lower than our revenue is what we hope to see and what we are beginning to see. If you go to the second page of the report, if you'll look at prior period for revenue, we were at $18,603,410 compared to prior year of $18,319,176. Our expenses are down at $16,382,028, and that's from the calendar year perspective. If you look at the fiscal year period, you'll see that, looking on the column on the right, you'll see how our revenue is down compared to expenses at $44,699,463 compared to $50,271,505. However, I did get a email from Ms. Nolan just this morning that says for the current fiscal year, we are starting to see that shift. She can have earlier access to information than what we receive from Cigna, and so she was able to tell in the numbers that we're seeing positive momentum at our current pace, and so we hope to continue that through the remainder of the fiscal year. On the third page of the report, as you are used to seeing, looking at the calendar year revenue versus expense comparison, which is the second grid on that particular sheet, you'll see that the net difference is $1,937,148.
Okay, and so that's just really for 3 months there that you were just quoting, right? The revenue exceeds the expenses by $1,937,000.
That is correct, sir.
Okay.
If there's no questions, we can move on to Fund 266. For Fund 266, year-to-date, we're at $558,725 compared to prior year-to-date of $440,905.
Okay. So that's your report.
Yes, sir.
Questions regarding either one of those funds? So are you saying we're trending a little better or about the same?
For our current month that we are in, we're trending a little better than what we have been. If you look at the revenue versus expenses of the prior period, you'll see that the expenses had just slightly increased. However, if you consider the information that was received this morning, we're starting to improve.
Okay. All right. I think we need a motion to approve the financial report, do we?
No, sir, we don't.
Don't need anything on that? Okay, so we'll move on unless there are further questions and move to workers' comp or OJI stats.
Mr. Good is on vacation. I'll cover his report for him. Ending in the month, we had 29 recordable OSHA claims. Of those, we had 7 lost day claims, and we had 7 other recordables and 15 day claims of restricted. The top claim type that we had within the year to date, we're at 18 on the struck or injured by, and if you can see on the month report that we are also as the highest claims of struck or injured by, as along with the fall, slip, or trip claims. Moving on to the second page of the report, for 2016, the number of claims were at 44, and for 2017, we're at 50 claims. The number of dollars incurred in 2016, we're at $78,000, and for 2017, we're at $126,000. Looking at the 15 claim total is next in your report, and we'll provide a breakdown of those. 11 of those are at the Board of Education. Again, you can see that fall slip trip and the struck or strike-by claims are the top in those 11. And the remaining 4 were within the Rutherford County General Division.
Okay, questions for Mrs. Street? So that looks pretty comparable to what's been occurring.
Yes, sir, it is.
No surprises there,
No, there's nothing that we're seeing right now to cause us any concern.
So no big dollars there actually having identified.
Right, and we do, as we've talked about before, we have the open medical claims from our outstanding workers' comps, and those can open and close ongoing, but currently we don't have, any that we have overly concerned about in terms of dollars.
Any further questions on this OJI or workers' comp? If not, let's go to wellness update. Mr. Perrion.
Good afternoon. I just got married, I believe.
Mr. Perrion.
Mr. Perrin, it's actually Mr. Puckett, and I'll take the blame for that. Mrs. Perrin's husband is also named Daniel, so, sometimes your fingers work faster than your brain, and I guess I typed Daniel Perrin on there instead of Puckett, so.
I thought that was
We're having a lot of fun with that in the office, though.
coincidental, but I wasn't
My face isn't red, I'm just sunburned, so.
Okay, our apologies for that,
No
sir.
problem, no problem. A quick wellness update for you guys. We had 2 lifestyle management classes this month, one on Alzheimer's education, another one on stress. 10 total participants for that. Our Know Your Numbers campaign is still going strong. 506 biometric screenings thus far to 157 online health assessments. One thing to note, 273 biometric screenings were done at the MedPoint Clinic in the month of March versus if you look last year, year-to-date was only 126. So I think we're trending in the right direction with that. Granted, we did have to incentivize it. We'll take what we can get. This month, if you haven't done your biometric screening and you want a chance to win a Yeti cooler, we're giving away 4 of them. So make sure you go to MedPoint and get that done if you're interested in winning that. You'll also notice we do not have any coaching numbers for this month. The reason being we're in the process of hiring a new wellness coordinator for Premise. She has been hired and will start on the 15th of next month. Is that right? Okay, and then we'll have some numbers to report at next month's meeting. Current and upcoming events, our Walk Across America program just kicked off on Monday. We have 64 participants in that. We're excited to see how that goes. Life Services EAP goes till the end of the month. It's on increasing resiliency. And again, it's lifeserviceseap.com. The username is Rutherford, and the password is employee, all lowercase. And last but certainly not least, the St. Thomas Mobile Mammography Bus will be in Rutherford County on May 8th and 9th. The 8th at Blackman Elementary and the 9th at Stewart's Creek, and they're from 9 to 3. If you or anyone you know wants to sign up that's on the county health plan, you can call the risk management office and we'll get you signed up. They're in 15-minute increments. And that's all for me, unless you guys have any questions.
Questions for Mr. Puckett, Ms. Allen?
On the incentives that you're doing, are you only giving those to the people who complete their numbers that particular month?
Correct. So we started in last month in March, and we gave away 3 iPads if they completed it that month, and we also counted January and February. For this month, it's Yeti coolers. Next month will be gift cards to Dick's. And then the last month that we're going to do it will be 10 massages. So you have a chance to win one of 10 massages in the month of June.
I'm just curious, are we encouraging procrastination?
No, we're lowering the, it's actually incentivizing earlier participation and use of the MedPoint clinics. It's intended to accomplish those two goals. So what you're actually seeing is a decrease in the cost of the incentive that we are doing through each of the drawings, merely for the reason of historically everyone waits to the last minute, and then our phones start becoming flooded because people are complaining about wait times at the MedPoint clinic. So we would like for them to begin earlier, and we are seeing that it has been effective. Our numbers have jumped dramatically for this point in the campaign for the utilization of MedPoint to get their blood drawn.
But I just want to make sure that we weren't encouraging people to wait for a better prize. You know,
No,
so.
it actually gets worse, so
Feeling bad.
now's the
Good.
time. Yeah.
Thank you.
All right, thank you, Mr. Puckett. All right, property and casualty insurance renewal, and Mrs. Janet Bowman's going to be telling us about that. Anything you want to say about that before she gets up here, Ms. Street?
Yes. So as we go through the process, Ms. Bowman will provide the renewal. One thing that I'd like to draw your attention to when we get to it is on page 3 of her renewal packet. There will be a decision that needs to be made by the committee regarding the retention level as it relates to our law enforcement liability, and we'll need to take that in a separate vote should you desire to actually accept the recommendation to increase the retention level for a premium savings result.
Great, thank you. Good afternoon, everybody. Okay, the first page just goes into your exposures, and basically what we're doing is we're grouping these into different sections. So at the very top, you've got your property exposures, then your casualty, and then your professional liability exposures. We're comparing expiring versus renewal, and then the difference. So you'll see in the very top the breakdown. We break it down by county and schools. You'll see an increase in the county building values of around $953,378, a little less than 1%. The contents values are the same. On the schools, we've had an increase of $15,884,206, about a 2% increase. The contents values for the schools remains the same. You'll see the specific amounts for insurance for the contractor's equipment, emergency equipment, fire and rescue at $3,239,397. It's the same as the renewal, and then the same for the contractor's equipment and fire and rescue at $10 million, and ambulance. The overall difference for the property is $16,837,584, roughly a 2% increase. When you get into the casualty, you'll notice kind of a big jump, if you will, into the vehicles. The expiring at $693, the quoted renewal at $953, the difference of $260. Most of that is falling in the contracted school buses. There's 265 of those. Those were rating based last year that the underwriters overlooked. And so they've actually charged for it this year, and you'll see that when we get to the casualty premiums. The values for the vehicles for physical damage are up around $2 million or 8%, and then the general operating budget is up around $21 million. These are rating bases. The crime, public officials, and educators' legal liability is based on the number of employees. You'll see that down roughly 466. And then the number of students in the schools is up roughly 895. So that just kind of gives you a snapshot of the exposures expiring versus renewal and the difference.
And Ms. Bowman, before you move on, just for the benefit of the committee, could you explain what coverage the county provides for the contracted school buses?
Yes, they're only providing liability for the school buses. There's no physical damage. They also have to carry their own liability when they're operating outside of a school event. So we are only covering them during pickup and drop off, or back to be serviced, or regular routine maintenance. And then they have to provide back to the school board proof that they have liability and physical damage insurance if they wish to carry the physical damage on their bus. So it's just liability to protect the students on the bus.
And Ms. Bowman, how did our number of employees decrease 466? Was that another mistake?
No, I pulled that directly from the budget.
Wow.
So that information is provided directly to her. We actually send out a list of questions.
So our finance department is furnishing this information?
You received that, Ms. Bowman, who did you receive it from this year, Mr. Sandvig?
Well, it breaks down, sometimes if it's Mr. Sandvig, if it's pertaining to the schools, it's different people throughout the county.
Yeah, I know that
provide
Ms.
the
Acton
information back.
provided
Okay,
some.
well,
so,
I mean,
yeah.
I'm sure that will help us with that decrease, but I don't know how in the world it is accurate. So maybe we ought to follow up here just.
Ms. Barnes.
Ms. Barnes,
I have a hard time believing that figure pertains to Rutherford County schools because we don't add employees. So is this something that's going to impact greatly the decision we make today with this particular number, or is that something we have to come back and visit after Mr. Sandvig perhaps reassesses? And I'm sorry he's not here today to
Of course.
talk about this.
7,000 would be even all of County General and all of the other funds, you might say, as well. So, Ms. Bowman, is this going to have a major impact on what our underwriters have told us our rate should be?
Not at this point in time unless it changes significantly.
So you don't think this is significant enough for them to make a real difference and maybe undercharge us for something they should be charging?
I don't believe so, like I said, unless there's a huge impact.
Okay.
Well, I would say, like, if you look at the difference in the 37% for vehicles, that's a big number. But if you're talking 2 to 4%, that's not going to impact it substantially.
Okay, so we'll assume it's not going to impact us substantially. Ms. Stevenson and your team will coordinate with Lisa and Mr. Sandvig and see if there's any rationale for this.
So why don't you just talk about what the renewal process entails to give the committee an idea of how you obtain the information?
Sure. So every year we do what we call a renewal process, and it usually goes out sometime in January. I send that information to Ms. Street, and then she disseminates it to all the different departments. I think Mr. Sandvig provided the information back. I know Ms. Hickerson provides information back. So all the different departments, the Sheriff's Department, EMS, all the information is gathered, and then what we do is then we compile that information, and then we send it off to different markets. I send off to 7 different markets this time. The application process is pretty lengthy. It's about a 37-page application. There are certain rating bases, obviously, that the underwriters are going to look at more so than others. But these are a few of the rating bases. This is not all the rating bases. And then also they're going to look at the loss exposure. That's going to be the big side. That's going to weigh heavily more so than the exposures, unless there's been a major increase, like I said, in exposures. If you're adding a whole department, if you're adding a fleet of vehicles, if we're adding 10 vehicles here and there with the sheriff's departments, it's not going to be a major impact. But if we're adding 200, it is going to be an impact. So anyway, we take the information to the underwriters. They then look at the loss experience. They look at the growth that the county's had, and then they come up and compute a number. And you can see that when we get kind of into the property, to the property rate. Everything in the property is strictly flat. It's just exposure increase.
So some of the information that we requested, I'm only able to get to a limited amount of it right now on my phone. I was able to get to the sheriff's office response. So, you know, how many nurses do you have? What's your average bed count in terms of how many inmates do you have? How many people work in the jail? Those type of questions. We also send questions over to the health department, and Dana answers those questions. We send out a plethora of questions to Mr. Sandvig, everything from,
Number of sports participants to number of coaches to nurses on site. It's to give the underwriter an idea and a snapshot of, they're sitting in either Chicago or New York, or in this case, on the liability, they're in London. And so they're trying to get a feel for, rather than just reading things in the paper or social media, of what really the exposure base is. So it helps them to kind of compile the information and put together renewal numbers that are consistent.
Okay, so let's proceed onward.
Okay. All right. The second page goes into the
Mr.
actual.
Chairman, I'm sorry, I have one question just before we leave that page. Is there a reason on the musical instruments, I assume those are inside the schools, correct?
That's correct.
Is there a reason why they're broken out separately than the content values?
Yeah, because they're actually scheduled, and that goes from years back.
Appreciate or?
No, they don't depreciate. We just had kept the same number in there. So to me, it's like almost an extra, above the contents, you've got this, that's a scheduled item. So for some reason, years back, the schools wanted to make sure that, and those may be owned actually by Rutherford County, obviously, instead of the students, is kind of my thought on that, because we do have that with other school systems as well.
I guess just because when I think about having to replace something, my first thought was the computers, was technology.
Right.
And why wouldn't you see that as a separate line item as opposed to musical instruments? So I just want to
Yeah.
make sure that, so when I saw the contents and then saw that separately, I wasn't sure why that would be.
And I'm thinking, because it's been on there for about 10 years like that, I'm thinking that these must be owned by the county as opposed to, like I said, individuals, and they just want them itemized. But your computers would be picked up under your contents. Okay. Any other questions on page 1? Okay. All right, page 2 goes into the property. Travelers is your current carrier. The expiring limits are exactly the same. The renewal retention is exactly the same. The rate is exactly the same. So the only thing you're going to see is the difference of value, which we kind of talked about on the first page. So you're going from $1,167,325,287 to $1,184,162,871. So you see a little bit difference in premium, but like I said, the rate still remained the same. It's just the exposure increase there. All of the inland marine, the flood, earthquake, extra expense, all of that remained the same as expiring.
We've had an increase from 462,000 to 468, is that it?
Yes, that's correct. I'm sorry,
Basically
yeah, the
because of
premium, that's correct. The premium, expiring premium was 462,781. The renewal premium is 468,928. A difference of 6,177. But like I said, it's not even all exposure, because their exposure increase was around 2%, and that's about a 1%.
I guess just as a matter of asking all the questions, Travelers is our current provider, and that's the only one. Is that the only one we considered this go-round, or?
No, we actually market it with, I actually sent out to market to 7 different carriers, and we had 5 declinations for the account overall.
Okay.
So the only one this year that was willing to quote on the county was your expiring carriers.
So in that process, do you think we still have a very good rate, you might say, even though
It's a very competitive quote. You got to figure it's 3 cents per every 100 of value that you have. So that's really...
That's still pretty good, you think?
Yeah, that's very good. Considering we just lost a couple of roofs off the schools, and that was right during the renewal process. Okay, any questions on the property?
And the biggest driver of the rate increase is because the exposures went up. If you look at what the value is versus where we ended,
Right.
That's really where that 168,000 comes from.
Yeah, if for some reason the values went down, your premium would have been down, because your rate, your base rate is actually the same as it was it's expiring.
You said you had 5 who declined to bid. What would be a reason that they would decline to bid, and why would there be 5 of them who would say, I don't want any part of Rutherford County?
Speaking for the property standpoint, because the rate is so low, and because they can pull up, because of all the social media, they can pull up any kind of storms that have come through here, and they just see the potential and the values, and a lot of insurance companies do not want to insure that type of value. So on the property side, on the liability side, Ms. Street and I got together, and I gave her a laundry list of the reasons why, and basically on the liability side, they went into social media and they pulled up everything that's happened within Rutherford County in the past 5 years, and so they were not interested. Yeah.
Okay. Ms. Street, are we going to take all of these in a group and approve them, or do we need to do them individually? Tell us where we need to go.
Well, generally, we would do it as one continuous vote. It would probably be best this year, because we do need to make that one decision on the liability side. If we went ahead and just took a vote on the property renewal, and then we handled them as separate categories this year.
Okay, that's the reason I was asking that. Okay, you've had some discussion regarding the renewal on the property insurance coverage. If there's no other discussion, do we have a motion regarding the acceptance of the bid that we have from Travelers? Motion to approve. All right, and a second? Ms. Allen. Now, further discussion? All right, then, if there's not, Ms. Allen?
Can we make that contingent on confirming that there's no significant change based on these numbers, since we're just not, I'm not trusting the negative 466 on employees, and I already know on the student numbers, 895 is not enough. I know we grew 1,200 students, so can we just make it contingent upon confirming?
Confirmation that there's no effect.
Yeah, confirmation that those number of employees has not been a negative or a factor.
That it makes no significant impact based on your experience to what the rate is.
And Ms. Stevenson stepped out. She was going to go to finance, see if she could get a report ran quickly, and I think Ms. Bowman wanted to say something
Yeah, I
as
do.
well.
It will not have any impact on your property, just because that's the buildings that you own. It would be on the liability side.
The liability,
Yeah.
okay. Maybe
That
she'll be
helps.
back. I saw her come back, but I don't know where she went with her piece of paper. Okay, we're on the property, and that, Ms. Bowman says, will not affect these property rates that we have and the costs associated with that. So any further discussion about the motion regarding the renewal with Travelers on the property? If not, everyone in favor of that, please say aye. Aye. Are there any opposed? All right, that's unanimous. Now, casualty and general liability and all that is next. Ms. Stevenson, do you have anything to report to us regarding these employees, or should we just continue on here?
I mean, we have, looks like a minimal increase. I don't have the part-time numbers for the Board of Ed, but their full-time positions went up 68. So they got 68 more full-time than they did part-time. County General has 22 more full-time, and we have 17 more part-time. So, I mean, it's, maybe 200 additional as opposed to a decline, yes.
So I guess we'll just continue this journey. Ms. Stevenson and others, Ms. Street, y'all get the sheet from which Ms. Bowman has tallied 6,587 and match that up with what we show in our records, okay? I think that's the only thing we can do right now is take that under advisement and see if there's anything else there. But anyway, Ms. Bowman has suggested that we're not going to be concerned about our property, and whether it's affected the liability or not may be a consideration. So
I know last year, Mayor, there were similar comments made based on the number of students that were reported to us, and there was no impact to the rate. And I can't recall what the variance was on that last year, but I do recall that it was questioned last year as to the number of students, but, we do take that information directly and do the renewal with it. So I would not expect that there would be, especially based on those numbers that she's just said, when you look at what the percentage is of the total count, there's not going to be a premium impact.
There would not be, because that would only be impacting the crime, public officials, and educators' legal liability, just those lines. It's not going to affect the general liability, law enforcement, or any auto liability or anything like that.
How does this work when we open a school mid-year? How's that added to the policy?
Yeah, typically, you've got a builder's risk policy that's $3 million right now, so obviously the builder would have it got to the point of 80% complete, but if something were to happen after it's 80% complete, but we have not added it to the schedule yet because it's still being built and it's vacant, then it's covered up to $3 million. And then after that $3 million, we get to the point of the last 30 days, then we typically report it to, Ms. Street's department reports it to insurance, and then we add it to the schedule. We'd add it midterm, and then the underwriters have a choice, and Travelers has been excellent to work with, to come back and charge a premium. It depends on if it was July 20th and this renews July 1st, they probably would add additional premium. If it's 6 months into the policy year, they've done this before where they've came back and just said, you know what, we'll just waive it till next year. So they've been extremely good to work with.
If we know in advance we're going to be opening a school in August, do we share that with them so that it's already factored into the policy?
Yes.
That's part of all the information that we'll provide to them during the renewal process. Yeah.
Okay, are we ready to talk about casualty insurance?
Okay, on the casualty, still the same carrier, Brit Global. The expiring limits and the renewal limits are exactly the same. You'll see in the green there, the expiring premium was $595,862. The renewal premium is $816,426. There's also the terrorism in the yellow at the very bottom of the page. It's called TRIA. That's the terrorism quote for liability and for property. You have not opted into that in years past. That just provides for the property. It would provide if there was a terrorist act that would not be covered under, and it was deemed by the government, it has to be deemed by the government as an act of terrorism, then that's where this would come in under the property side to protect your buildings. But you also have a limit already built in there for, I think it's $2,500,000 for those kinds of events as well. And on the general liability side, that's just more or less to protect the public. So y'all have opted not to purchase those in the past, so I just kind of wanted to point that out. As Ms. Street said, that we have given kind of the circumstances, we went back and looked at trying to get some of that premium down and looked at some optional quotes. So you'll see that kind of in the asterisks, the two asterisks. This is optional quote to increase self-insured retention for law enforcement liability from $350,000 to $500,000. The reduction in premium for that would be $200,000. So you take $200,000 off that $816,426 and bring that down to $616,426. Now, of course, what that means is that, and that would just be for law enforcement. It would not be impact your general liability or anything else. All of those retentions you'll see up there at the top under expiring retentions and renewal retentions would remain the same if you opted to take that. Now, I will say this. Typically, once you go up, it's hard to go back down. Just like anything else. If anybody else looks at it coming in, it's just like no different than your personal auto insurance. If you go up in a deductible on comp and collision, it's always harder to go back down. But in this case, it is a significant savings in premium, and especially if you don't think you're going to have as many claims in that area. There is also right below that, with the three asterisks, an optional quote to increase limits to $10 million per occurrence with a $10 million aggregate. Right now, you've got on the general liability a $5 million per occurrence, and then you'll see straight down the board, with the exception of crime coverage, you've got a $5 million per occurrence. The general liability carries a $10 million aggregate. The optional quote to look at the $10 million per occurrence with the $10 million aggregate for all lines is an additional premium of $335,000. I know that there were some questions midterm about possibly increasing the limits, and so I just wanted to present that option to you at the renewal.
That 5 to 10 is just per occurrence. That's one occurrence, is that correct?
That is correct.
Okay, I'm sure some of you have some questions. I'll let you ask them first. I have a few. Ms. Stevenson?
So to increase that would just be because the cost of claims is going up, rising, so that would be to cover or to offset those cost of claims. So right now at $5 million may not cover our cost of claims, which is why we'd want the $10 million. Is that what you're talking about?
Yeah, we had talked about that, like I said, midterm, about, when there's a lot of activity going on, would we need more than $5 million per occurrence?
No, but we would still have to have a claim in excess of $5 million to benefit from making this change, and we're going to spend $335,000 more, whether we ever have another claim or not that exceeds $5 million. And we've not had a claim exceeding $5 million that I'm aware of. Is that correct?
That is correct. That is correct. We have them filed all the time asking for that, but we've never had a claim to penetrate that limit.
Then one other question. With all the things that are going on with the internet, and this may be covered somewhere else in here, but when we think of terrorism, you think of buildings or property or those type things, but we also have to think about the security of our data. Is that covered under this policy as well? So like
Cyber.
No, it is not covered.
Covered in
That's
that,
correct.
okay.
Yes. But that is something that we can provide an option for.
What
Okay.
is your recommendation, Ms. Bowen, in terms of the SIR?
Yeah, it is a good savings in premium, and I know that with the new sheriff, it's just going to depend on, I mean, you spend that $200,000, or that take that and put it back in the budget versus paying out that premium. At least, my opinion there is you're rolling the dice that it is going to be a better year, as opposed to just paying out that premium on the
So,
front
and
end.
any claim that's already existing is going to fall to $350,000
That's
SIR
correct.
anyway, so
That
the
is correct.
$500,000 would only apply to
7-1 going
future
forward.
claims. However, I can tell you that it is, it's very common knowledge that we have a $350,000 retention rate. I think every plaintiff's attorney in town knows that. And so that limit does also set expectations in claims that we receive, claims being lawsuits against the county as well. So, and once we take that increase to $500,000, it's going to be very hard, even whenever our claims go down, to drop it to a level to where we can continue to see that savings that we want to see. It's great first year, but after that, if we move it back down to $350,000, we could absorb that easily over in a 1 to 2 year period, those savings, in terms of premium cost.
Now, I don't know exactly what you were telling us there, but let me ask a question or two. We've had, you can probably tell us specifically, we've had just a small number of claims, and I don't even know whether it's more than 1, 2, or 3, that have exceeded $350,000. Is that a fair statement? Now, we still got a few claims out there that might change what I'm just telling you. They haven't been finalized. But for the most part, and those are already capped at the $350,000. So Britt's already in for anything over that. All right. For two, and I can tell, and she can as well, that $350,000 cap sure does make a difference when you're mediating. We push that to 500, it's going to make it more difficult for us
Setting the
to
bar
settle
low.
these claims, outside of a judge or a court telling us something. So personally, I don't see the benefit of spending saving $200,000
For the long-term
for the long term of it.
impact of it.
And these claims that are now we're facing that may exceed this 350 I don't think the probability of them occurring with the same frequency is nearly as great.
I have a question.
Is Hickerson?
Our retentions that we have, do they kind of lay in line with other counties? I don't know in the whole scheme of thing of the 95 counties in Tennessee of self-insured as if we are, but there's bound to be some.
Right.
Do you know, are we kind of in line with what, size-wise? I'm just picking Williamson
Right.
County because size-wise, I
Sure.
don't know if they're self-insured or not, but are our numbers similar? I'm not talking renewals, I'm talking
Right.
retentions.
Yes.
These are reasonable, very smart numbers for a self-insured government or county government.
Right.
Kind of across the board that you see. We're not off in the deep end of having a little number or a big number as opposed to the majority of
That's
our size
correct.
counties in the area.
Yeah, that's correct. Actually, yours is a little bit lower than your surrounding counties that are self-insured. We typically, when you have fire and police exposure, because they're and emergency management, you're running, which most counties obviously do, and then size is going to be, against you as well. But your analogy with Williamson County, they are also self-insured, and yes, y'all's deductible or retention is lower. So we typically see it in the neighborhood of anywhere from $500,000 to even up to $1 million. And usually the $1 million is on the work comp side, and of course you guys are OJI. So, but yes, these are, we've been able to, and the reason why we set these retentions back years ago when you went self-insured is because it was around the Tort Liability Act, and that's, we felt like that was a good place to start because you're not going over that. Now, obviously, tort immunity is gone once you get into federal courts, but that was kind of the reason. We've been able to hang on to that. I'm actually the one that went to underwriters and suggested, can you give us an optional quote, because we knew the premium was going to come back high. When we got so many declinations from nobody wanting to even look at the renewal, I felt like we needed to bring in some options.
The other thing, too, to consider is that even though our retention levels are lower than what other counties may be, our ability to fund the premiums, the risk mitigation strategy in terms of what is our actual exposure given the size of our jail, the number of people in our population, the size of our county is greater, the claims opportunity are greater, so we want to, try to control our cost as much as we can.
So let me ask this question another way, because I may have misspoken what I should have said even a while ago. If we really believe that our public safety liability and number of cases that are filed against us, if we really believe that's going to decline and the severity of the cases that are being filed will be less, should we increase this to $500,000 and take the reduction in premium or not? What's your thoughts on that?
I think that you could, with 2 claims, you could blow through that reduction with the higher retention. And like I said, once you go up, it's hard to get an underwriter to ever go back down because they feel like it's set there for a reason. Even though they didn't set it, I'm the one that requested it.
So if we had a couple of bad claims, which we hope we don't have, we would blow through the 500,000s, what you're saying, and
Even if we went through one where we paid out $500,000.
be able to come back to 350 and save. So what is your answer saying you're not sure it's a wise thing to do to increase this to 500? Is that what you just said? I want to be sure.
For the long-term impact of what taking a one-year savings could result in, the recommendation is not to take, even though $200,000 is a considerable amount of money, we do expect that the claims would drop. The numbers may drop. The value doesn't always necessarily drop. It depends on all the claim conditions. And, on one claim or 2 claims is what she said, if we ended up paying out $500,000, and that's $150,000 of your $200,000 savings, and if we're not going to be able to ever go back to $350,000, are we prepared to stay at the $500,000 retention level from here going forward, realizing that the savings from a premium perspective in year 2 is going to be very minimal compared to what we're seeing in this 1 year? I mean, there's a reason why they give you such an incentive to take that renewal option.
Okay, more questions or comments from some of you? Mr. Marlin?
So the reduction of 200,000, that's only increasing the law enforcement liability. That's not increasing any of the others.
That's correct. Yeah, the retention would go up to 500,000 on that. Everything else would remain at 350. The auto physical damage is at 25,000, and the crime is at 25,000. So everything else would remain.
So we're just kind of gambling with that one out of all these.
That's correct.
We could get hit in the public officials area and not help us.
Right.
But most of our exposure clearly has been in the public safety area, the big dollars.
We could always, we could always revisit this again next year to see if we could get a reduction in premium. By then, we should know exactly how many claims are going to be filed that could still be out there at this particular time, but not actually filed into the system, which would, we would just have a better idea. Since we've had some changeover in personnel at the sheriff's office, we could actually see what that impact of the number of claims would look like.
Can we talk through that same logic in the blue footnote where you're talking about increasing the limits to 10 million, 10 million, instead of the 5 million, 10 million? Because, I can't imagine we have that many claims that would go over 5 million either.
Right.
I can't imagine any going over 5 million right now.
So at the time,
with some of the severity of some of these, unless something I don't know.
No, I think it was just a question that was posed based on the number of claims and the nature of the claims that we were receiving at the specific time. And as she's indicated, with all the social media and the other factors that drive awareness of the claims filed against the insurance, the question was just posed, is there enough coverage out there? And so to respond to that question, which we had indicated at the time that we felt that there was, she was just saying that, if it's still a concern, here is an option that you may want to consider. I don't believe that myself nor Ms. Bone is recommending that we consider the 1010 at all.
Provides an idea of what that additional cost would be. I agree with Ms. Street. I'm not coming in and recommending it, but it's nice to know what that premium would be, because for $10 million, some people might think, oh, it's just going to be, $20,000 or $30,000, but it's a significant amount of money, because it's doubling your limits. But yeah, just again, like she said, just thought that would be something to present for you all to look at and make you aware that if you were looking for additional limits, or and again, we can present this option next year and the following year. It's not saying to take it, but at least you have options.
Mr. Marlin.
So what if we went down to 2.5 million?
I'm sorry, say that again.
If we went to, instead of 5 million, what if we went the other way? Could we do that?
Reduce the limits?
Yeah.
Absolutely.
I mean, I don't know if we've never, getting there at the 5, could we go the opposite way and save money?
What do you see, Ms. Bowman, in terms of what the premium difference would be? What percentage of savings on the premium?
I would say probably, well, since we haven't penetrated the 5 million limit, and we haven't gotten close to the 5 million, I don't know if it would be significant, but it's something that would be worth checking on.
When are these, this is 7, July the 7th? I mean, July the 1st, excuse me.
So my recommendation would be, Mayor, that if the committee would be willing to do so, unfortunately, it just takes a while to get market information back. These lines of business are very tight in terms of how far out they're willing to quote the business prior to the renewal, which is why we generally bring this in April. My recommendation to the committee would be to consider what you think is a significant enough variance to the premium in order for it to be considered. As an example, if it's a 5% variance to the premium, is that what you're hoping to achieve by dropping it to $2.5 million from the $5 million? What percentage of savings would be palatable for you all if we were to bring it back and say, well, if you did that, it would take this $816,000 premium to $700,000. Is that enough? What in your mind are you looking for? And do a contingency recommendation so that we'll have the ability to move forward and get this through with the full commission. If you're comfortable in doing that, she could go back and check it, and we could present it, since you're a recommending body, to the Budget and Finance Committee if that seems like an option.
It takes a couple of days to get their options, so we definitely could present that before Budget and Finance.
Or we bring it back in May, we can. It's up to the committee.
But if we lower the part that we're self-insured for, that's going to make the premium go up, correct?
I think he's saying to lower the limit from $5 million per occurrence down to $2,500,000. So that would reduce the premium. I don't think it's going to be a significant reduction, but I think it would reduce, it's going to reduce their exposure. But seeing how Britt has not paid out any $5 million claim, there still would be, on the hook for $2.5 million if it were to come through.
Okay, but we don't know how much to say is enough savings for us to want to go down to 2.5, actually. And I don't know, Ms. Street or Ms. Bowman, if either one of you know, do we have any current claims that we have estimated that are in excess of $2.5 million?
Some that are excess, that have been filed in excess of $5 million.
So we got some even filed, so we hadn't settled one at 2.5 or more, but we've got some that the so-called experts have identified that it could be that high. Is that correct?
Right, the suit
Where the
was filed.
claim, the lawsuit is filed is what she means.
Oh,
That
yeah.
the lawsuit is filed at that exposure
Yeah,
level.
they filed and added punitive and all that stuff, so I get all of that, but that usually doesn't happen.
But in terms of the reserve
so-
limit, we do not.
All that being said, I don't know what the right number is, but it's certainly, to take that kind of additional exposure, that's reduction from 816 ought to be somewhere much in excess of $100,000. I don't think we ought to take the risk. I'm just talking about a number, Mr. Marlin. I don't know what the right number is actually. So I can think of one case where there were deaths and injuries in a wreck that we don't know how many multiple people will get a piece of that action. That could be a biggie, and we haven't even got started on that yet.
Of course, anything that's already filed would be subject to.
That's
the
already
existing-
subject to this 5 million business, so we're covered there. But who knows when another one's going to happen? Is anybody wise enough to make a motion? Yes, ma'am. Go ahead. Without taking the increase of the liability on public safety law enforcement from 350 to 500, you're not suggesting. So you're saying that we move to stay at 350, stay at our 5 million and 10 million limits, and for a premium of $816,426. That's your motion. And then somebody else might amend it. Now, do we have a second? All right. Mr. Hafner, and I think, and Ms. Hickerson. Now, more discussion.
Yeah, I just had, just on you're saying it's not going to be significant, not going to get us down to 700,000.
I think just ballpark, in my years of experience, I would say probably it would be anywhere from probably 30,000 to 60,000.
That helps us, thank you.
Ms. Bowman, one question too. If I recall, last year, Britt did not take a rate increase.
That's correct. We actually had a reduction last year of around 50,000, so thank you for bringing that up.
I had a note, and I just managed to work it in the conversation. I forgot to.
All right, further discussion. I think,
Mr. Hefner.
oh, excuse me, Mr. Hafner, didn't see you.
Did we decide anything on the terrorism option? Did that come up at all? Was that part of this motion?
Right, it is.
Also, so
and-
it was for
well,
822,000.
Did you include that in your motion? That's not included in the current motion that's on the floor.
That's what we need to figure out.
We
if
haven't
want-
taken that one before. We've never taken the terrorism before.
We don't, that's not a recommended
Oh.
option. It's so diminutive compared to everything else. It's only a small amount of money, but we don't need that.
We vetted that out in the last 2 renewals, and the design of that program is such that the opportunity for us to actually recover in the event of what someone would typically consider a terrorist act would not warrant even paying the premium of $3,000. So I believe that her recommendation was to accept $816,426 renewal as quoted on this, and all the optional quotes, including the terrorism, would not be adopted as part of her proposal or the recommendation.
Okay, that's just what I wanted to hear.
Okay, further discussion or questions? If not, you're ready to vote. All of you in
Allen?
favor of, excuse me, Ms. Allen.
I have a question. I guess if we're keeping all the coverage limits the same and we've not had, any catastrophic claims, I'm just curious why this is such a big increase. I was trying to do the numbers. Looks like it's about a 27% increase.
Right. The exposure increase was around 37%. If you take that very first page and kind of look at the numbers. So there was a exposure increase, and then, of course, we had the decertification at the jail. And most markets won't touch that in the U.S., but it's a good thing we are at the Lloyd's market. So they were willing to stay on the renewal.
All right, any more discussion? If not, all of you in favor of that motion, then please say aye. Aye. Opposed? Okay.
Okay, the next section, hopefully this will be a little bit easier, is just the renewal for the Rutherford County Government Auxiliary Officers. These are the sheriff's Auxiliary officers, the volunteers, the current plan right now, the present plan, you'll see is $25,000. This actually is a flat renewal. If you go to the second page of that, you'll see the premium at $6,297, so it is exactly the same as expiring. They did provide options. You'll see Plan 1 and 2 is just options to increase the limit of coverage.
And this covers basically, in our group, these are the volunteer firefighters and
These are
what
actually the
else?
volunteer sheriff's office.
Oh, the sheriff's
deputies.
office.
Right, we'll do the volunteer firemen as well. And I'd like to remind the committee that we did take an increase to the coverage levels 2 years ago, and they are in line with what we offer our full-time active employee population, and we would not make a recommendation to accept Plan 1 or 2, but to actually renew based on present plan.
So this page that we're looking at now is just for those people that are the,
Volunteer auxiliary officers at the Sheriff's Department.
okay. And how many of those folks do we actually have? Does anyone even know? It's a small number, isn't it? Oh, that many, 120? So these are people that are sort of auxiliary officers that are maybe retirees that still want to serve and help some.
Well, a lot of times they'll deputize them to work parades or
Right.
special events typically as well.
Traffic control, things like that, that they go out and work.
This would not include our people that are directing traffic, you might say, at our schools.
No, sir, they're covered under our other insurance
They're covered
lines.
otherwise.
Correct, right. Ms. Stevenson, I believe she had a question, sir.
Is who? Stevenson? Okay.
So you said the present plan is in line with what our full-time employees makes, is that right?
Thanks.
Well, I mean, not makes, but I mean it's coverage, their coverage is,
Yeah, so we looked at, many years ago, we looked back and we looked at what insurance was option, and the concern that I brought forward was that we have volunteers that the county benefits from, that their employer would not cover them under certain instances in the event that they were injured in that volunteer role. And so the intention was to provide them with medical and disability benefit for any injury incurred as a volunteer for Rutherford County in those specific positions. And of the policies that are available to us, we try to align them as closely as possible for our active employees based on what options were available through Provident, which is the only company that we could receive a quote from for that line.
okay, thanks.
That's one of the things on, increasing the limits. We want to make sure that we're offering them as close to, but not necessarily better than what we're doing our active employees.
So this policy covers them, would give them the benefit. What happens if they're injured? How do we cover them?
Want to answer this?
This is more like, they would be picked up under this policy because they're volunteers and are not actually employees of the county. Think of this more as an accident policy. So they would file under this policy if they were injured
That's right.
while working an event for Rutherford County.
So we wouldn't cover any of their medical expenses?
Yeah, we would through this, yes.
Yeah, under-
through this. This is
yes.
how we make sure that financial gap for them is closed so that they don't, end up in a situation where they have incurred an injury and now, they're faced with all these incurred medical bills. They can't work, they can't pay their, mortgage and things like that. We wanted to close that financial gap for them, and that's what we've done on this policy. Right.
Okay, so we're now first looking at the Rutherford County Government Auxiliary Officers, and these are people that work with our Sheriff's Department as volunteers.
We can vote on the Providence policies together if you'd like.
And when the next group is the firefighters,
Right, similar, if not identical to what you see with the Sheriff's Department. Their present plan is in the first column there. There's obviously options 1 and 2 to increase the limits. The premium is up if you'll look at the second page, the current premium, or the quoted premium is $4,366. The expiring premium was $4,108. Mr. Farley had added, I think there was 20-something, 15 to 20 additional firefighters to the program, so that increased the cost $258. Other than that, everything else remains the same.
So the firefighters are basically already on what may be proposed for Plan 1 for the auxiliary officers, right?
Present plan, sir.
Same levels there.
I'll make a motion that we accept the coverage under present plan at both the renewal rates for Provident, the $6,297 and $4,366.
That Ms. Barnes that seconded that? Oh, no, excuse me, Ms. Crowell. Okay, so the recommendation is to stay with the present plan on both of those auxiliary officers and firefighter responder death benefits and impairment benefits, et cetera. Is that correct, Ms. Allen? That's your motion.
I want to make sure we read this right. So on the first Provident plan, the present plan, we'll just say the covered injury death benefit is $25,000 and Plan 1 is $50,000. Under the firefighters, their covered injury death benefit is already present plan $50,000.
That's correct.
So they have a little bit greater benefit from the people who were in the policy before.
Yeah, and let me kind of tell you how that occurred. And this has probably been 10 years ago when the volunteer fire departments were rolling in to be under the operation of the county. Their present plan had that in there. So we were going in there to make sure we didn't come back and offer them less. And so that's the reason why their plan started that way. And they were the first ones to roll out with this accident plan.
Okay. Questions, discussion? The motion is to continue under both of these proposals. Excuse me, Mr. Hafner.
Me again. I may have missed something here. I'm looking at these sheets, and it's got two classes of employees at the top. Class 1 is the volunteers, even all the way down to part-time employees of the sponsoring organization. And then Class 2 says career personnel of the sponsoring organization.
Right.
Is everybody covered under this,
Yeah.
even people that are working for the county
Right.
as career?
Yeah, the intent is the first class is the volunteers. The second one, the career personnel, it would actually go, the OJI, because you would be actually, the career personnel are going to be actual employees of Rutherford County. The OJI program policy would pick up first, but then this would act as a secondary policy.
But don't we have a death benefit already, or does that death benefit cover you even when you're not on duty for career employees generally?
And are you talking about under the OJI program?
No, I'm just saying the death benefit. Is this is different because it only applies while you're working, right?
That's correct, yes.
And so it only covers full-time people at the sheriff's department and full-time people at the fire department.
That's correct.
Not of the EMS. Covered at the EMS.
No, it would cover EMS because it's emergency volunteer as well. And
it doesn't say it in the top. It says emergency responders, but it says firefighter emergency responders. So this covers the EMS people too?
let me go back and say, if that, and I don't know if I can answer this question, if EMS is considered part of the sponsoring organization under the Rutherford County Government Firefighters Emergency Responders, the answer would be yes, that you would be covered. If it's not part of that organization,
We don't know.
okay.
It's what?
No, we don't present the numbers in our renewal. We
Yeah, because you only said 120 people is the total number. Well, that definitely doesn't include us because we have more than that.
Right, so this is only underwritten for volunteer firefighters. The Class 1 and Class 2 is the definition by Provident used to describe what the breadth of the coverage is extended to. Our renewal only reflects, and our renewal numbers that are submitted to Provident only reflects the actual information related to the volunteer firefighters and the volunteer auxiliary officers. We do not submit information to them requesting coverage for full-time active employee personnel of Rutherford County government.
So that's just a description at the top of classes.
That's used by
Has
the
nothing to do with the
insurance.
policy itself.
Correct, right. That's not who we have requested insurance for. That is just who their classes available, the classes that are extended for coverage to be underwritten for.
Okay. Thanks.
Were to add those parties, then we would see a much higher premium than what's being quoted here for us, because this is the annual premium.
And the main reason why we do this, because they, like I said, they're not county employees, so that if they were to be injured, they would not have any coverage. This was kind of a stopgap so that we didn't have some lawsuits that came about because their medical wasn't paid. So we felt like this is a good bridge in between the two, where if you're, a county employee, you're obviously going to be picked up under the OJI program.
Okay, so like the volunteers at PAWS, our animal control, because we're really just talking about volunteer people. We're not talking about paid employees, correct?
That's correct.
Okay.
So I apologize because I did misstate, because Ms. Street's right. We provide the rating base just for, now, if I'll elaborate a little bit more, she probably will get me for this, but if we included them in the underwriting base, then obviously they could be, as long as they're under that,
And
under
the
that
premium would
class.
reflect it.
Correct.
But the volunteers at Paul's are not covered under
Included.
this.
So this is
Correct.
just law enforcement and firefighters that are volunteers.
That's correct.
Correct, okay.
Volunteers at the Sheriff's Department who are classified as auxiliary volunteers. Yeah.
Okay, so motion is on the floor to approve the 2 current plans and keep them in place for just those 2 distinct groups, period. Further discussion? All of you in favor of that, please say aye. Aye. Are there any opposed? All right, thank you. Now, what else have we got here, Ms. Bowman?
The last page is, this is something new, you haven't seen this before. This is professional liability for the dentist and the dentist assistant that's over at the health department. This is something that's required by the state, and we realized that the current policy was not picking that up. And so we came back in and offered, this is professional liability for $1 million each occurrence with a $3 million aggregate. It carries a $2,500 deductible, and the premium is $2,000.
So that's the one dentist that we have at the health
Right.
department. Is that?
And the dental assistant.
And where?
Dental assistant.
Dental assistant. It would provide coverage under that dentist in this policy for the dental assistant as well.
Right, oh, and the dental assistant would be covered as well. Now, is that employee a county employee or a state employee that we're reimbursing?
County employee. Right. Correct.
But the county, what was that second? Okay, so they are our responsibility. All right, just want to be sure who's in charge of them. All right, so this is a requirement, and we haven't had this before.
And, well, we have had the requirement. We had requested that under our renewal, and once we vetted it out in preparation of this renewal, learned that it had, although it had been requested, they had not included it and had not differentiated it in the renewal packet. And so therefore, we have reached out and provided separate coverage this time to ensure that we have adequately met the requirement.
And this is from HC-Allied. That's the name of the company that's doing this?
Admiral Insurance Company.
So will this be included in the amount?
Admiral, excuse me.
Will this be included in the amount that the health department, that the state reimburses us for the health department?
Don't know.
I don't know if we're going to get reimbursed. They typically do reimburse us for all of those costs. We may probably have to put it in our budget to include this money. Okay, we need a motion then. Motion to approve. A second. Mr. Bowles, any further discussion? All right, all of you in favor of that, please say aye. Any opposed? Okay. Now, do we have any more business from Mrs. Bowman, Ms. Street?
No, sir. Thank you.
All right, well, thank you again very much. Any other business? Mrs. Street, you have one more item there, I believe.
Yes, sir, I do. I'd like to ask Ms. Shannon McNair and Christy Bowman to come up to the podium, please. If you recall, not long ago, we talked about the addition of a part-time registered dietitian for the clinic. And Ms. Asher Brainerd, did you want to join him up here? No? Okay. We wanted to give Ms. McNair an opportunity. She doesn't get to come up here very often. And so, Ms. McNair, if you'd like to introduce Ms. Bowling and tell them what she's doing at the clinic. This is our new part-time registered dietitian.
For having us today. So this is Christy Boland. She's our registered dietitian that we just hired there at the clinic. She is on a part-time status with us, so that's about 20 hours a week. Our intention is to utilize her to help supplement our wellness coordinator that I think Mr. Puckett had told you guys we're hiring and will be in the office starting May 15th. So she'll just be supplementing her and helping with nutrition, helping people meet their numbers, weight loss, hypercholesteremia, hypertension, diabetes, all of that. So.
Bowling, would you just share a little bit of your background with the committee so they'll know?
Sure. So I went to Lipscomb, and I graduated in 2002, and then I spent the last 8 or 9 years in Orlando, Florida, working on Disney's on-site clinic. And then my family's from here, so I wanted to move back out of that heat. So I'm back here, and started my own practice in Nashville, so I had a little bit of time where I could take on some part-time work, and so I'm here with you guys. So, yeah, I work 3 days a week typically, so 1 10-hour day on Tuesdays, 8 to 6, and then 2 5-hour days, Wednesdays and Thursdays, 1 to 6. So.
And what's your location?
It's I'm at Blackman Clinic mainly.
She can go to any of the 3 sites that we have. You know, we have the Walter Hill, the Blackman, and the Stewart's Creek location. So she's happy to see patients at all 3 sites.
You make appointments with this lady just like you do with a doctor or whoever about medical problems?
So since her hours are limited, we are looking to filter them through our wellness coordinator, but our wellness coordinator will have constant contact with Christy throughout the week. So if Christy's booked up, they are still going to be communicating to help provide that dietitian information that the patients need.
So realistically, the way it works is this. You'll go to the doctor at MedPoint. You will talk about your wellness concerns. They're going to refer you to the wellness coordinator. The wellness coordinator is going to get to meet with you, and they're going to refer you over to Christy. So I know how we are, and we're all going to call up and say, I want to meet with Christy and bypass the process. And so I just want to let you know that that's really, you have a couple of steps to go through there.
Have her on board.
Thank you.
Thank you, guys.
Thank you.
Okay, well, let's be sure we communicate with all of our employees and tell them about this opportunity as they go first to the doctor.
That's right.
Then they may get a recommendation to the wellness that needs assistance from the wellness coordinator and Ms. Bowling. All right. Any other business?
Ms. Barnes has something, sir.
Ms. Barnes?
I'd like to make a statement for the record, and I've had discussion with Ms. Street, and I'm going to refer to my notes because I want to make sure I say what I need to. The concern I have is that during open enrollment or following open enrollment, that we currently cancel benefits for employees who fail to make a complete enrollment process, rather than default to a different plan within our benefits program. I know that we've done both ways in the past years. At one point, we did default. We changed 2 or 3 years ago to a cancellation of benefits. And I understand the logic and rationale behind the cancellation because our push is to make sure all of our eligible benefits employees pay attention during open enrollment, read the information, make the best choice for their families, and make very informed decisions. And when we had the default, people sometimes typically chose to just default or just follow the same plan, and they really didn't read and make those best informed decisions for themselves and their families. So I know that the percentage of participation has probably increased over these years that we had the cancellation process. But I have to say that it is devastating to families and to employees when they find out or realize that they have lost total medical benefits for the next school year. So I have asked the Risk Management Department to review this and to take serious consideration to reinstating a default process. I, for one department, I know other departments will do their due diligence to make sure that employees push to follow all the information, read it, understand their decisions, and try to keep that percentage up as high as it has been these past couple of years. We don't want that to drop. We want employees to make good decisions. But it also, I'd like to, again, stress that it is devastating to people when they realize either of their own fault, they simply did not meet the deadline, or they thought they did it correctly and they didn't. And I'm going to speak to now the Board of Education. We have over almost 5,000 employees. We're in a smaller department. It certainly might be easier to manage that small group of people and touch base with every person, or have smaller department heads touch base. But in a school system, we have a slightly more limited process. I can ask my principal to check with their 150 employees, and then among all the other things they're doing, some do it well and some don't do it as well. So it really makes it difficult to make sure to reach everyone, and we try to do everything we can to send that information out. So again, to Ms. Street and to the Risk Management Department, we appreciate everything you do. This is not a criticism, not a negative statement, but I wish we would reconsider that process and allow for a default to whichever plan works best. Thank you.
So I'd like to, if you don't mind, I'd like to just respond a little bit, and then I'm going to bring back information next month for discussion with the group. So if you'll note that for one of our agenda items. So we sent out about 5,900 packets last year during annual enrollment. And of those individuals who were enrolled in 2016, and this only affects medical, everything else rolls over, meaning that the same election they had in 16 would have remained in 17 if they don't go in and complete the online enrollment process. Of those individuals that had insurance in 2016, which is around 5,100 active employees that had that insurance, I believe it was 114 people did not go in and complete the annual enrollment process. So the participation rate is astronomical. There was a problem that I don't necessarily call it a problem, but within the Board of Education, of those that determined that they lost their coverage, one of the main things that came up that was a recurrent theme of those that we spoke with was that their email, that because we send out 5-6 reminders during the course of that. We send the postcard, save the date, we send out the packet to the home, and then we send out 5-6 emails just during the annual enrollment period, in addition to, hey, it's coming, which is an additional 1 or 2. There was a recurrent theme, and that was that the email reminders that I would send to Ms. Barnes, who in turn sends it out to all the staff within the Board of Education, was going into their clutter box. And the reason it goes into a clutter box is this. Microsoft Office it has logic within it, and if you go in and you develop a pattern of behavior that could be created by as little as 1 email, if you go in and you delete an email from a sender, in this case it would have been Ms. Barnes, then Microsoft Office will identify that as clutter, and it will begin moving emails from that sender into your clutter box. I know within the county general side, we get an email once a week that says, these emails are in your clutter box, are they important to you? And it would say in that scenario, if people deleted my emails, Melissa Street, 5, so Ms. Stevenson would know that she's deleted 5 of my emails that week without reading them, right? Which she doesn't do. But however, that was a common theme that we saw from Board of Education employees, is that they do not open the emails that Ms. Barnes is sending out, and that pattern of behavior either already existed, obviously, that's what caused all the email reminders to go into their clutter box, or they started it at the time that the open enrollment emails went out. But typically, it would have been in two weeks of reports. You all turned off that functionality following open enrollment. I don't know if you've turned it back on or not.
Change that completely, but I just need to state again that many of our employees, while they have an email address, they do not routinely check their email. We have a large number of employees who do not actively use email on a day-to-day basis, and so that also contributes to this.
Sure. Yeah, and I'm like Ms. Barnes, I'm not really pointing fingers or placing blames, but I want to educate about how, why we started and what the statistics look like, and then I'm going to ask you all, what would you like to do? Because in the past, we've tried many things within the annual enrollment process, and this is pretty much what I'm going to repeat next month, so you're all going to preview, right? Where we have defaulted. And by default, we mean whatever your medical election is in 2017, you would get that same medical election in 2018. People should be happy, right? They didn't do what they were told they needed to do, and nothing changed. Well, majority of people are happy, but unfortunately, it's not the majority that always drives the bus in situations like this, right? Because to me, 114 people out of 5,000 plus is not a lot of people. However, we would get calls and complaints and very upset people because they wouldn't have kept the insurance if they would have paid attention to the rate increase. And the only reason I bring this up to say, no matter what we do, it's not going to be viewed as perfection. We're just trying to minimize what's the very best it can do, right? There have been years where we have said, okay, if you don't go in and make the election, then we're going to roll you to the least cost plan, which was our HRA plan, and we would make sure our employee kept covered, and they would get the HRA plan, right? And then we would get disgruntled calls regarding that. The reason we started requiring active enrollment is because of Affordable Care Act reporting requirements, where we have to report coding for declinations. And we needed to start capturing that information to show, why are you not taking the insurance? And that is the reason why. We know how hard it is to change behaviors. I've told Ms. Barnes this. We're already a couple years in. I have concerns. What if a new reporting requirement comes up and we need them to go in again and actively participate? So what I'd like to do is to just bring this up for discussion next month again and get the wishes of the committee. And I'm going to bring you back results, open enrollment results, to show you as much information as I can in regards to what type of response we get based on different approaches that we've used, and let you all set the direction for the next annual enrollment.
And in addition to that, go ahead and see what the new bill is going to contain therein with respect to whatever changes are being made in Washington on reporting all this information that we don't believe anybody's even looking at. Ms. Allen.
Is there a way for us to capture mobile numbers? Because I know, like with me, if somebody's going to send me an email, a lot of times I'll say, send me a text and tell me to check my email. And I know the school system has, mass text messaging features that as a parent you can opt into, but that just seems like, that's a number that changes far less than emails addresses change.
I do know that the school board, and I'll let Ms. Barnes respond to
That's
this.
School Messenger, which we try to keep a running list of cell phone numbers or home phone numbers for our employees, but again, if that employee doesn't report the change, then we don't have the accurate number, but we do have the capability to send out School Messenger to all of our employees as often as we need to, and we actually did that 2 years ago. We didn't do it this past year for some reason, but that's something we have on our notes already to do again next year, probably at least twice during open enrollment.
Okay, so Ms. Street, I'm sure they're going to be expecting with great anticipation your report and summary of this, and I don't know, I guess you're going to lay out a few of the options, which you've already sort of laid out some of those that we've had previously. Mr. Marlin.
Yeah, I'll just give my perspective on that. My employer went to this a couple years ago, and we have to go in and re-enroll. And I think it comes down to personal responsibility. Each person is responsible for their own employment, their health care. We went through this at my work, and you'll have those late people that wait until the last minute of the last day to go in and enroll, no matter how many emails, no matter how many text messages. I'm sure they got the notice in the mail that said you had to re-enroll. So I would be interested in how many, 114, I think the number was, that didn't get re-enrolled. How many, did they not go do their biometric screenings? Did they not fill out their questionnaire? That's part of their requirements too.
Well, no, not to obtain the insurance, it's not. The wellness fee is applied regardless. So even if they don't elect, let's say they don't do the open enrollment, right, and they don't have the medical the next year, we're still going to take that wellness deduction because it's based on the prior year's participation, right? So it's not a way to circumvent that.
Well,
that
unless we
process.
send all these letters out certified, they will continue to say they never received it in the mail.
And,
Had a few of those phone calls even at my level.
and phone numbers change, people change services, I think that would help increase. That's just my perspective on it, so it'd be interesting to see what you come back with.
Mr. Bowles.
I was just wondering if the county has anybody in HR or some area that assists any employee that wants to sign up.
So benefits within Rutherford County are handled in the Risk Management Department for both County General, Airport Authority, Community Care, and the Board of Education and the Highway Department, since they're a separate funding item. We do that. We will help them look at claims experience, decide what's best, what plan option would be best for them. We always give a disclaimer that they make the decision, have to live with it, but here's what we see. And we do actually sit down with people. It's a constant flow of traffic during the annual enrollment process where we are sitting with them and we are logging in on, with their permission and helping them make their elections. The Highway Department is excellent about sending their people over to us. Solid Waste is excellent about sending their people over to us. We have a lot of school custodians that come in that we help, but within the schools themselves, a lot of times the secretaries fill that role and they help enroll a lot of people as well.
Thank you.
Okay, an interesting discussion, important discussion, and a lot of time has been spent trying to assist and encourage and follow up on these people that have somehow missed the boat. It is very, very important to each of them and us as well. Any other business? If not, this meeting is adjourned, and thank you very much.